Okay, so it's establishing a standard costing system. Okay, so I'll read that. Look at that. In preparing the budget, it is important that the standards set are those that can be achieved. So what they are saying is when you set a standard, it must be achievable. You can't set anything that is not achievable. Okay, so you have to set some realistic targets which can be achieved. Did you understand that?
Yeah.
Okay. Reference is made to recent past periods and to future expectations. So you can refer to the past data or you can refer to future expectation levels and you can set the targets when starting a standard costing system. Okay.
Okay.
With fluctuating prices, okay, with changing prices and changing technology, both prices and quantities can change frequently. So standards must be reset whenever there is a marked departure from the old criteria. That means now, okay, due to changes in technology, due to changes in price, both the price and quantity can change frequently. Okay, so standards also must be changed and it also must be reset whenever there's a change from the past data. Did you understand that?
Yeah.
Okay. Standards must be monitored regularly and any variances investigated. So we have to monitor the standards. The company must monitor the standards regularly, and also any differences they have to investigate whether there is any difference, whether the variance have improved, whether there's a favorable variance. Okay, if there's an adverse variance, should they make changes? Okay, like that they have to monitor the standards every day. Okay, and also these variances may be classified as controllable or uncontrollable, and it is important that managers are not held responsible for the variances outside their control. Okay, so variance, there are two types. One is controllable, other one is uncontrollable. Okay, variance which are controllable, the managers can deal with that, but then variances that are outside their control, external things, so those factors, managers are not responsible for them. They are just telling you these things. Okay. Did you understand that?
Okay. Yeah, I understood that.
Okay. Getting the correct standard is vitally important in standard costing as it is an example of management by exception. Okay. So management by exception, let me just give you a small introduction here. Okay. Look at this. Management by exception means looking at the financial and operational results of any business enterprise. Okay, the operating results means it provides information on how successful a company is in its core business. Okay, so management by exception means it looks at the financial and operations result of a business. Okay, their aim is to point out the significant differences between the expected and budgeted amounts. That means management by exception. If they follow a rule like this, then their aim is to, identify the big differences in expected and budgeted amounts. Okay, did you understand that part?
No, not really. Could you
Okay.
explain that a bit again?
Okay, I'll explain this you detailedly in the last part, okay? Because after all this, again, management by exception comes. So I think now you won't understand. Just, did you get a small idea in this? What I taught you?
Yeah. Yeah, a small one
Okay,
I did, but then I didn't
okay.
completely understand it.
Okay, so management by exception means now, let's say now your variance, sometimes it can be favorable and it can be adverse. So if the variants are adverse, they will have a policy. The company will have a policy called management by exception. Okay, it means what, they will identify significant changes, big changes in the expected and budgeted amounts, and they will identify like how to improve the standards. Okay, like they will look at the financial and operational results of a business, and they will find whether the what steps they can take to make the adverse variance a favorable one. Okay, they will look at the expected and budgeted amounts and figure that out. Did you understand now?
Yeah.
Sure?
Yeah, I did know.
Okay. So what they are saying, don't worry, I'll explain that to you later in detail. Okay. So after all this, management by exception is there. Okay. And then look at this. So getting the correct standard is vitally important in standard costing. So getting the correct standard is very important because it is an example of management by exception. Okay. If the business functions are operating to the standard, then no action will be taken to improve on the current situation. Okay. So if the business operations are carried out operated to the standard, okay, then no action will be taken to improve the current situation. Okay, only when the standards are not met with the management of the business, take action to correct the standard. So only when the standards are not met, then the management will take some actions to correct them. But when it's correct, they won't take any actions. Did you understand that part?
Yeah, I understood.
Okay. Generally, two types of standards are used: ideal standards and attainable standards. Ideal standards. Ideal standards are based on the most efficient operating conditions that could be achieved by the business. So, ideal standard is based on the most efficient operating conditions, okay, that could be achieved by the business. They assume that any machinery used will be operating at full capacity, will with no idle time. Okay, so it's like the most efficient operating conditions. Those cases they will, that is meant by ideal standard. Okay, they will assume that the machinery will be operating at full capacity, okay, with no idle time. And also they will make sure that employees will be working at full efficiency with no absenteeism. They won't take leaves and all that. They will be working at full max. They will put their maximum effort and work. So that is all those are examples of ideal standards. Okay. And also another example is that all materials of the right quality will be available at the right time with no wastage. So every materials, raw materials, it should be in right quality, and also it should be at the right available. It should be available at the right time and no wastage. Okay, so all those are ideal standards. Okay, did you understand that part?
Yeah, I did.
Okay. Okay. These conditions rarely occur in business. So they are saying these conditions rarely occur in business. Hence the term ideal. Ideal means best. Okay. So these standards are unlikely to be met. And if imposed, would probably demotivate employees. So they are saying these standards are not likely to be met, and if a company imposes this ideal standard, the employees will be demotivated, because in ideal standard everything should be best. That is their policy. Did you understand that?
Yeah, I understood that.
Okay, now look at attainable standard. Attainable standards are standards of performance that are based on normal operating conditions. Okay, so that is like, normal operating conditions. Okay, standards of performance that is based on normal, like day-to-day operating conditions. Okay, these will take into account normal levels of material wastage. Okay, and labor idle time also. They should not be too easy or too difficult to achieve also. Okay, as it should not be too easy also, it should not be too difficult also, in the middle. Okay, uh they should not be too easy or too difficult to achieve, but should be just right to motivate employees to achieve them. So they have to set a standard where the employees can achieve them. Okay, so employees have to get motivated to achieve them. It should be like not too easy, not too difficult also, like normal. Did you understand that?
Yeah, I understand that.
Okay. Okay, look at the next this thing. In an ideal world, the business should involve the employees in setting standards rather than imposing them on employees. So what they are saying is, the business should not involve employees in setting the standard rather than imposing them on employees. Okay, like they should tell the like they should like not should they are telling that in an ideal world business should involve employees in setting the standard rather than imposing on them. and also has standard setting is of vital importance. It is useful at this stage to work through the three main cost groups and see how each standard is determined. So now they are saying it is important to know these six stages. Okay, these are the stages used in establishing a standard costing system. So when a company starts a standard costing system, they have to follow these things, and it is very important to follow these things. First one is setting standard cost. First, you have to set standard cost. Second thing is you have to compare standard to actual. What's the standard rate and what's the actual rate? Third thing, we have to calculate the total variances. So earlier we did questions when calculating total variance, calculating subvariance, all that, right?
Yeah, we did.
Okay, so third thing we have to calculate total variance. Fourth thing we have to calculate subvariance, and the fifth thing we have to analyze reasons for variance. So it means now let's say when you take direct material usage variance, if it is adverse, then you have to analyze that. What's the reason for that adverse variance? If it is favorable, then it's good. So you have to analyze those reasons for variances also. And then in the sixth stage, taking appropriate actions. So you have to take appropriate actions if it is an adverse variance. So it's like that. Did you understand all this now?
Yeah, I did.
Okay. Okay, now, okay, look at this. Reasons for variances. Okay, having calculated variances for material, labor, and overheads, including the relevant subvariances, it is essential that business identify. So now, in past paper questions, they will tell you to calculate all the variances. In some questions, everything. In some question, just few. So when you calculate everything, it is important that we need to understand the causes of the variance, whether like what has caused the variance to be adverse, okay, why it is a favorable variance, like that. Okay, so a business is able to take corrective actions. So if it is an adverse variance, then the business will be able to take corrective actions to rectify the situation, to solve the situation and improve the financial performance. Did you understand that part?
Yeah, I did.
Okay, variances can be favorable or adverse, like what I told you. And the total material and labor variances will be a function of the different subvariants. Okay, so in price variance, there is direct material price and direct material usage variance. So price variance is the main one, and the subvariance is material usage and direct material price variance. Did you understand that?
Yeah.
Okay, when teaching equations also, I taught you. Okay, do you have any doubts there?
No, no doubt in that.
Okay, so it is necessary to examine the reasons for these variants. So if there are any adverse variants, so you have to know what's the reason for that adverse variance. And if there's a favorable one, you have to know what's the reason for this variance to be favorable, like that. Only then can we understand the reason for the total variance. So if it is necessary to identify all the reasons for the variance, and after that only we will be able to understand the reason of the total variance. Okay, first one we'll look at material variance. So material variance is that this is the sum of the two subvariants, material price variance and material usage variance. Okay, do you want me to explain you again all the equations what I taught you before?
No, no need to.
Okay, so now look at this. These are the reasons for variance. Material price variance. So we'll see when the material price variance is favorable. Causes of favorable variance. So now we'll see why, like now in a question, if you get favorable, if you get the answer, a positive answer, then it will be favorable. So we'll see the reasons for favorable variance. First reason is lower price charged by the supplier. So if the supplier has charged lower prices, then we can get a favorable variance. And the second one is lower quality material purchased. So if the material that you're purchasing is in low quality, then also we can get a favorable one. And then third one is bulk purchasing or trade discount. When you get when you purchase in bulk, you'll get discounts, right? So that will also cause a favorable variance. You have to just understand these things. Did you understand now?
Yeah, I understand that.
Okay, now look at this causes of favorable variance for material. Okay, before that we'll go at adverse variance. So material price variance, look at the adverse part. Look at this causes of adverse variance. So when you get an answer which is negative, then it will become adverse. So when the material price variance is adverse, then it means that higher prices charged by the suppliers. So in a past paper question, sometimes they will ask what is the causes of adverse variance for material price variance. If not, they will tell you to identify the reasons for the variance or something like that. So you have to be able to write answers. So all these things you have to know. You have to just memorize this, okay, and you have to understand that. Before memorizing, understand. So if the suppliers charge higher price, then it will cause an adverse variance. And also the second thing is increased carriage inward cost. So if the carriage inward cost has increased, then also adverse variance. Third one is better quality material purchase. If you purchase a better quality material, then the price also will be high. So that will cause an adverse variance. And then ending of trade discounts. So if the trade discounts are not there anymore, then also adverse variance. The fifth one is supply chain problems leading to increased price. So sometimes there might be a problem in supply, and also it will lead to increased prices. So all these are causes of adverse variance. Did you understand both now?
Yeah, I understood both those.
Okay.